Hello and welcome to Investment Insight, your clear take on the markets. Let's get started.
It is great to be here. And honestly, the stack of reports we have to get through today it's heavy. We're not looking at the usual market noise this week.
No, we are definitely not. Usually when we sit down, we're talking about, a quarterly earnings beat, maybe a new iPhone, or if the Fed's going to nudge interest rates.
Standard stuff,
It's
yeah.
all standard stuff. Today, we are looking at two stories that, they fundamentally challenge the boundaries of what we think is possible.
That is the perfect way to frame it. Boundaries.
Right. We're talking about one story in the corporate world and another one happening right next door on the geopolitical map. We're looking at the potential birth of a $3 trillion corporate empire.
And a political shakeup involving $500 billion in credit.
It's just, it sounds like a movie plot.
It really does. On the surface, you might think this is from a sci-fi novel or, a political thriller set 10 years from now. But if you look at the data coming out of late January, specifically reports from Reuters and the Financial Times, the money is already moving. These aren't just ideas anymore.
So here's the roadmap for this deep dive. First, we're going to dissect these supermerger rumors around Elon Musk. We're talking Tesla, SpaceX, xAI, all potentially joining forces.
Into this massive conglomerate, yeah.
Then we are going to pivot north. There's a brewing separation movement in Alberta, Canada, and we need to talk about how the Trump administration is getting involved with some serious cash on the table.
Two very different stories, but they're both about leverage. Both are about rewriting the rules. And as always, we're going to strip away the hype.
Exactly. We need to look at this through the lens of a beginner investor or even just a regular person and ask, what does this actually mean for the market, for your portfolio?
Let's get into it.
Okay, let's start with the Musk situation. The headline number that just jumped out at me from the reports was $3 trillion.
Yeah.
That is the potential combined valuation if these companies merge. $3 trillion. That puts you in the same league as Microsoft or Apple.
It's a staggering figure. It's hard to even visualize that much value. But to understand how we even get there, you can't just look at the total. You have to look at the pieces of the puzzle.
Individually, right.
Especially because the landscape has shifted, like just this week around January 30th.
Okay, so let's start with the piece that I think surprises people the most. SpaceX. For the longest time, this was the private, cool rocket company. It felt like a distinct thing,
Landing boosters on drone ships, yeah.
Yeah.
Very sci-fi.
Exactly. But now we're hearing about an IPO.
Yes. And according to Reuters reports from January 28th and 30th, this isn't just talk anymore. An IPO, an initial public offering, is being seriously considered for June 2026.
And the valuation they're looking at is estimated around
$1.5 trillion.
Hold on. $1.5 trillion for SpaceX alone.
I know.
That's bigger than most public companies on Earth. That's bigger than the GDP of most countries.
It sounds high, I know. But here's the key stat that justifies it, and this is the main takeaway if you're skeptical. In 2025, SpaceX reportedly made between $15 and $16 billion in revenue.
Okay.
But more importantly, they made $8 billion in profit.
Wait, $8 billion in profit? I thought rocket science was famously a money pit. You know the old joke, how do you become a millionaire in space?
Start as a billionaire. Yeah, that used to be true. But the business model has completely flipped. It's not just about rockets anymore.
Right.
That profit is largely driven by Starlink, their satellite internet business.
The constellation.
Exactly. Think of Starlink like a utility, like your electric company, but for the internet, and it covers the entire globe. Once the satellites are up there, they act like a toll booth in the sky.
So it's a subscription model.
People pay a monthly subscription, and the margins on that are massive. So when we talk about a $1.5 trillion valuation, it's not a guess. It's a number that capital markets are starting to verify based on real earnings.
Okay, that makes more sense. You've got the toll booth in the sky printing money. Then you have xAI. This is the new kid on the block. Where do they fit?
xAI is the growth engine. They recently raised funding that values the company at around $23 billion. But, and this is a big but, there is already talk of that ballooning to a $200 billion valuation in the near future.
That is a massive jump, almost 10 times.
It's aggressive, but in the current AI climate, not impossible. AI is the new electricity. Everyone needs it.
And then, of course, you have Tesla, the public anchor, the one we can all buy stock in right now.
Yeah.
So here's the big question. If SpaceX is profitable and Tesla is selling cars, why merge them? Why go through all the headache of creating this empire?
This is where it gets really fascinating. Reports from Bloomberg and Reuters suggest this moved from a thought experiment to a, quote, real option late in January. The simple explanation is identity.
Identity, like a corporate midlife crisis.
In a way, yes. Think about how Tesla is valued. Right now, a lot of the market still looks at Tesla and just sees a car company. And car companies, like Ford or GM, they have lower profit margins. It's heavy, expensive work.
Right. Car stocks trade at much lower multiples than, say, a tech stock like Google or Nvidia.
Exactly. But Musk wants Tesla to be seen as a tech, AI, and robotics company. Those are the companies that get the premium valuations. They get the rock star treatment from Wall Street.
Okay, I think I have an analogy for this. Tell me if this works. It's like a band where the lead singer, that's Tesla, is tired of playing country music.
Country music.
Yeah, because country albums only sell so many copies. It's a steady living, but it's not global domination. He wants to be a rock star. So he decides to form a supergroup. He brings in the best drummer he knows, SpaceX rockets.
Okay, I see it.
And the best guitarist, the xAI brains. And suddenly, they aren't a country band anymore. They're the Rolling Stones.
That is actually a really solid analogy. Tesla wants to change the genre it's playing in. By bringing in SpaceX and xAI, you aren't just selling EVs anymore. You're selling a whole ecosystem. Energy, transportation, space, AI. You become an infrastructure company for the future.
But is it just about image? Or is there a nuts and bolts financial reason, too? Because usually these things are about moving money around.
Oh, absolutely. There's a money trail. You have to connect the dots. Tesla has agreed to invest about $2 billion into xAI. Why? Because AI is incredibly expensive.
The computers aren't cheap.
It's not just the computers, it's the power, the cooling, the data centers. It requires massive capital. Merging allows them to move cash and resources around internally. SpaceX has the cash flow from Starlink, remember that $8 billion profit?
Right.
Tesla has manufacturing. xAI has the brains. Together, they solve each other's bottlenecks.
That makes sense on paper. It sounds efficient. But this sounds a little complicated for the average shareholder. If I own Tesla stock, do I want them buying rockets? Or funding an AI startup that might burn cash for years?
And that raises the most critical question. Governance. If you're listening and you hold Tesla stock, this is your biggest risk factor. In finance, we call these related party transactions.
Okay, break that down. No jargon. What does that actually mean for me?
Simple explanation. Imagine you're buying a house from your brother.
Okay, buying a house from my brother. Got it.
The bank is going to look at that deal very, very closely. They want to make sure you paid a fair market price and didn't just give your brother an extra $100,000 because, you like him.
Right, because it's family.
Yeah.
You might be doing him a favor with my money, the bank's money.
Exactly. Investors are the bank in this scenario. They're worried about conflicts of interest. Is Tesla using shareholder money to prop up xAI? Is the valuation fair? If Tesla buys xAI, who decides the price?
Well, Elon Musk owns both, so he's essentially negotiating with himself.
Precisely. And that is a legal minefield. We've already seen challenges in Delaware courts about this stuff. A merger of this size would invite massive scrutiny. If Tesla wants that re-rating we talked about, it has to prove its governance is squeaky clean.
They can't just treat it like a family business.
Not if they want that $3 trillion valuation.
So the upside is a massive tech ecosystem. The downside is a governance nightmare where my value as a shareholder gets diluted.
That is the bet investors have to weigh.
Okay, let's shift gears. We're going from erasing corporate borders to testing actual physical borders. Let's look north to Canada.
This is a story that's been developing quietly, but it just got very, very loud.
The headline here is just wild. We're talking about Alberta, Canada's oil country, potentially separating from Canada. And the twist isn't just the separation, it's that the U.S. government seems to be getting involved financially.
It's an incredibly delicate situation. According to the Financial Times, representatives from a group called the Alberta Prosperity Project, or APP, have met with Trump administration officials in Washington at least 3 times since April 2025.
And they weren't just, shooting the breeze.
No. They discussed a potential $500 billion credit facility.
$500 billion. That's $500 billion.
Yes. Think of it like a massive loan or a financial safety net. The idea is if Alberta votes to separate, the transition would be incredibly volatile. The U.S. is reportedly offering this backing to stabilize their new economy.
That's aggressive. Let's flip the script for a second. Imagine if Texas wanted to leave the U.S. and China offered them a $500 billion loan to help them do it.
Washington would lose its mind.
Yeah.
It puts the scale of the tension into perspective. It would be viewed as hostile interference, and the Trump administration isn't being shy. Scott Bessent, a key figure there, has referred to Alberta as a natural partner.
I'm sure the Canadian government loves hearing that.
Not at all. Canadian Prime Minister Mark Carney has pushed back hard, calling for respect of sovereignty. It's creating a real diplomatic rift.
So let's back up. For our American listeners who might not follow Canadian politics closely, why is Alberta so unhappy? Is this just a fringe thing, or is there real weight behind it?
Well, think of Alberta as the Texas of Canada. It's the energy heartland. And it really comes down to what I call the golden goose problem.
The golden goose.
Alberta produces 84% of Canada's oil and 61% of its natural gas. They are the engine of the Canadian economy. They generate the wealth, but they feel like they don't get to call the shots.
So they're the rich relative paying all the bills.
Exactly. There's a system in Canada called equalization, where money from richer provinces goes to poorer ones. Alberta feels like they're paying in but getting blocked by federal regulations, like on pipelines.
They feel like they're paying the bills but living under someone else's rules.
You've got it. And it's moved past just grumbling. Elections Alberta confirmed in January that signature sheets for a separation petition have actually been issued. It's moved from complaining at the dinner table to filing the paperwork.
But I see a logistical nightmare here. Alberta is landlocked.
Yep.
Even if they separate, they still need to get that oil out. If they leave Canada, don't they just become entirely dependent on the U.S.?
And that is the strategic catch. If Alberta leaves, they can't easily ship oil east or west through Canada anymore. Their only real option is south, to us. They would essentially become an economic satellite of the United States.
Which brings me back to the U.S. motivation. Why does the Trump administration care? Why offer $500 billion? Do they actually want a 51st state?
It's probably not about annexation, not yet anyway. It's about leverage. This is the art of the deal in practice.
How so?
The USMCA, the trade agreement between the U.S., Mexico, and Canada, is up for review. Trump is likely using the Alberta issue as a massive pressure point against the entire country of Canada.
Ah, okay. So it's a bargaining chip.
A huge one. By making Canada nervous about internal division, the U.S. gains the upper hand. If Ottawa is terrified of losing its economic engine, they might concede on other trade issues just to keep the U.S. from courting Alberta.
I have another analogy. It's like you're negotiating your rent with your landlord.
Okay, I'm with you.
You're trying to get a lower price.
Yeah.
But while you're talking to him, you're loudly on the phone with the moving company.
That is a perfect visualization.
You might not actually want to move, but if the landlord thinks you're about to leave, he might get nervous enough to give you a better deal just to keep things stable.
That's exactly it. The U.S. is signaling to Canada. We have other options. We can deal with Alberta directly. It forces Canada to be more accommodating.
So what does this mean for the market? If I'm an investor looking at Canada, should I be worried?
Well, uncertainty is the enemy of investment. This hurts the Canadian dollar, the CAD. When a country's borders are in question, its currency suffers. We are already seeing volatility.
And for the energy companies.
It creates policy risk. If you're a CEO in Alberta and you don't know who's in charge of regulations in 2 years, Alberta or Ottawa, you pause spending. You delay big projects. Capital hates that kind of ambiguity.
It's interesting. We have two massive stories that seem so different, but they're kind of mirroring each other.
How do you mean?
Well, think about it. You have Musk trying to erase the borders between his companies to build a tech giant, and then you have the U.S. administration testing the political borders of Canada, trying to create new lines to get a better trade deal.
That is a great observation. Both are stories about restructuring boundaries, and both involve massive amounts of capital moving to reshape the rules of the game.
Okay, so for the listener, let's distill this. What are the key takeaways? What should they be watching in the next few months?
For the Musk story, watch the IPOs. If SpaceX goes public in June at that huge 1.5 trillion number, the merger becomes much more likely. But keep a sharp eye on those governance risks. Any hint of shareholder lawsuits, and the deal could stall.
And for the Canada story?
Don't panic about a new country forming overnight. That won't happen. Instead, focus on the volatility. Watch the Canadian dollar and Canadian energy stocks. They're going to be on a roller coaster as long as this threat is being used as a bargaining chip.
It really makes you think about where power actually lies these days.
It does. Is it in the capital city, or is it in the flow of capital itself? In both of these cases, the money seems to be driving the politics, not the other way around.
As we watch these massive shifts, here's a final provocative thought for you to chew on. In the future economy, What actually matters more to your daily life? The physical borders of your country, or the digital borders of the corporate ecosystem you're subscribed to?
That is the question of the decade, isn't it? If you live in a Tesla Starlink ecosystem, does it matter if you're in Alberta or Montana?
Which one actually has more influence over your wallet and your future? Something to mull over.
Indeed.
That's all for today's deep dive. Thanks for listening. Don't forget to subscribe and hit that like button.